So what's the way forward for rupee? Even the Reserve Bank of India has indicated again and again that the forex market activity is a function of free market and they will only intervene when it is necessary. The job of Reserve Bank of India is to really edge out the volatility. But in the near term, rupee is changing life for exporters, importers, equity market watchers, and also for corporates who are sitting on dollar-denominated debt. So let's discuss and debate what's the way forward for rupee with Ila Patnaik, professor with an IPBF, and also from Hong Kong. On the phone line, we have Paul Michel. He represents HSBC. Paul, good to have you on ET Now. Thank you for joining us. Ila, you go first. How much of the current decline in rupee, to your mind, is technical in nature and is fundamental in nature?
We were all expecting a rupee depreciation this quarter, so it's not surprising. You see, for the last 5-6 months, RBI has been intervening in the markets, and ever since they started intervening again, I mean, they had stayed away from the market for a long time, many months actually, and let the rupee be flexible. But when they started intervening, and when you saw a large current account deficit and a higher inflation, which was giving you an appreciated real effective exchange rate, then one expected a depreciation. Now, when that depreciation would come and how sharply it comes often depends on the market and the situation at that time. So I wouldn't call it technical. I would say that this was driven by fundamentals. Any economy which has a higher inflation, a twin deficit problem, will see a depreciation of the currency regardless of what the central bank tries to do, regardless of what controls you put in. But as long as your fiscal policy, your monetary policy is such that you don't have very stable policies, you are going to see a depreciation of the currency. It had to happen.
Paul, just want to get you into this. What has led to the sharp decline in the currency? Is the slide of the rupee structural or technical? What is your sense?
Well, I think it's a combination of factors. First and foremost, the domestic environment surrounding the currency has obviously been quite challenging, and we realize that in particular probably since March, but also we have to take into account a deteriorating external environment. So developments yet again in the Eurozone, as problematic as they are typically not very good for a high beta currency or a very volatile currency like the Indian rupee. So again, it's while we can get caught up on the fiscal issues surrounding the backdrop of the currency, it's definitely not constructive, and I fully agree that it's not helpful. But we also have to take into account when the global growth environment is weakening, generally currencies that have a current account deficit backdrop struggle, and that puts the rupee in particular in a very difficult situation.
Paul, the fiscal situation or the current debt to GDP ratio for some of the developed markets is also not strong. So why are investors hiding in US dollar at a time when the US debt levels are also alarmingly high?
That's a very good question. I think what it comes down to is that when you have significant uncertainty in market and why investors gravitate towards the dollar, it's not because of a safe haven. I do not believe that the US dollar is a safe haven currency for some of the key reasons which you have just mentioned. But what it comes down to is liquidity. And when the market needs liquidity, by definition, it gravitates towards the US dollar. It is the reserve currency of the world, and I really think that's the key part of this story right now.
Ila, what is your sense? Considering investors are clearly looking at dollar as a safe haven, renewed fears on Greece have raised, demand for the USD as a safe haven as well. How will the global concerns and risk aversion continue to impact rupee? And after almost, touching or crashing to 56 levels, how bad could it get from here?
It's very hard to say. See, the only thing that we could think about from our end is that if our fundamentals are weak, then there are triggers, there are external triggers. What impact could those external triggers have on our economy? And if we remain weak, if we continue to have a large subsidy on oil, if we continue to keep increasing our oil bill, various government expenditures and so on, if our policies remain such that we don't control the excess of spending over the production we have, which is basically the current account deficit. So it keeps growing because we spend more. Savings has come down both for households and government savings has come down. Then any triggers whether it's the euro breakup of euro and exit of Greece, or whether it is a downgrading of Japan, or anything else that happens in the external world which makes the dollar stronger because of external factors and from what's happening in the world, would mean that the rupee dollar also, the dollar gets stronger and the rupee gets weaker. And as with a large current account deficit, which we are funding out of foreign investment flows, hopefully, because we don't want to do more debt flows, so we're doing more foreign, we prefer to have foreign investment flows. As our tax regime, our investment regime, our reform agenda doesn't become any better today, especially after the budget, as we have seen, that they have also added to the negative triggers. So if foreign investment flows out, if there is an external crisis, I mean, you're getting to a perfect storm, and you can't say where the rupee would go. It could easily depreciate unless we do something, unless we improve policies. I can easily see whatever foreign investment is coming in, even more of that goes out. The worst situation could be when it is the domestic industries who start feeling, or domestic investors who start feeling, that we don't have confidence in the rupee anymore and we want to move to the dollar and we want to move abroad. The rupee could go down even further.
Right. Paul, rather than looking at rupee in isolation, should we look at the dollar index? Because dollar index will be the lead indicator of how emerging market currencies will move. The problem is not India, the problem is global market or emerging market currencies.
Well, like I said, I mean, I think it's a combination of specific domestic factors which are not helpful. I mean, we've touched upon the weak policy framework surrounding the currency, which has not been helpful. It's been a continued drag on it. So there isn't these tough choices being made domestically to try and introduce, key policies to alleviate some of the uncertainty surrounding the currency. Now, is the dollar index a good bellwether for it? Yeah, it is, because it's a very liquid proxy for how the dollar is moving against most of the major currencies. But right now, in this climate of fear, the dollar is going to remain on strong ground against not only other major currencies, but also the rupee as well.
So, Paul, what are the tools that the central bank, that's the Reserve Bank of India, has to protect the slide in the rupee? Because each time they seem to be leaving the rupee to perform as per market conditions, and any intervention by them as well, either, more OMOs or to buy GSECs, that's been pretty much failing.
That's right, and you're seeing these rolling out of measures to try and slow the move lower by the currency, and it's increasingly proving very difficult, because when a new measure is announced or there's a change in regulations, there might give a temporary boost to the currency, but it's very short-lived, and I think that really defines that the sentiment around the currency is very, very poor, and the way things are looking right now, I do not see much light at the end of the tunnel, at least not for the moment, and perhaps all the central bank can really do is to try and slow the downward move in the currency. I think it would be very, very difficult to stop it completely unless there is a significant improvement in the external environment, and also some key domestic decisions that can actually boost the policy framework around the currency as well.
Ila, let's look at the glass half full theory, which is that international commodity prices have corrected, and once the fear trade subsides, maybe it could be good news for an economy like India?
See, even if global commodity prices correct, the mistake we are making is this huge oil subsidy and fertilizer subsidy. So, we shouldn't just think that, okay, that will do the job. I think we really should start thinking about what we need to do. Despite the good news and the bad news coming from abroad, we're relatively, in that sense, we're a small country. We have to take all this as given. Even if global commodity prices become better, even if oil prices go down, and what we have today is we've not decontrolled oil prices. Tomorrow they can go up again. I mean, these things move. Europe, let's just say good news starts coming in somehow, though it doesn't look very probable, but all those problems get solved, the world economy gets stronger, and commodity prices start going up again. If commodity prices start going up again, we'll be in deeper trouble. So it's okay to think about what might happen in the immediate short run, and that this might help if it happens. But I really don't think that that's the way policymakers in India should look at it. Policymakers in India should look at it as, what is it that we can do? After all, we have control only over our domestic policies. And the one thing on this front, which is global commodity prices, is that we really have wrong policies. Tomorrow, I think if there's one thing that the government can do which might help, I'm not saying it will solve the problem, but which might help, is to free up petroleum prices, is to get rid of this subsidy. It will bring down your twin deficit. Over some time, though not immediately, it will bring down the oil import bill, and it would give the correct signal. Austerity measures are not about cutting down foreign travel. That's such a small part of the expenditure. That's more politics. It doesn't really matter. What really matters is these big issues, and today everybody can see that. So our approach to what if things go well in the world, if commodity prices come down, our approach should be, in the meanwhile, let's put our policy framework together and do better on that.